Today we're breaking down Oracle Corporation, one of the biggest names in enterprise tech, cloud computing, and AI infrastructure. This isn't just another slow-moving tech giant anymore. Something big is changing inside Oracle, and it could either create massive wealth or serious downside risk. So if you're holding ORCL or thinking about buying it, you need to see this. Let's start with what's happening right now. Oracle stock is up about 11.6% over the past year, which is decent but not explosive compared to other AI-driven stocks. Here's where it gets interesting. The stock is currently trading below its 200-day moving average, and the RSI sits around 42, which means it's not overbought and not oversold, just stuck in the middle. So the market is basically saying we're not sure yet, but here's the real question. Why are analysts so bullish when the stock itself looks stuck? The answer comes down to one word: cloud plus AI. Oracle is aggressively transforming from a legacy database company into a cloud infrastructure powerhouse. And unlike hype-driven companies, Oracle is actually generating massive profits while doing it. But there's a twist. To build this AI and cloud empire, Oracle is spending insane amounts of money. Capital expenditures alone are over $48 billion, which is huge. So the company is basically making a massive bet, spend big now and dominate later, and the question is, will that bet actually pay off? Now let's quickly break down the numbers. Oracle generated about $64 billion in revenue and $16.19 billion in net profit, with earnings per share of $5.57. Margins are very strong, gross margin around 67%, operating margin 32%, and profit margin about 25%. Return on equity is extremely high at 57%, showing strong efficiency. But here comes the red flag. Total debt is around $162 billion, while cash is only about $39 billion, which means net debt is over $123 billion, and free cash flow is negative $24.7 billion. Yes, negative. And that's a serious warning sign. Now, let's talk about the bull case. Why investors are excited. First, analysts are extremely bullish, with an average price target of $261, which implies more than 80% upside from current levels. Second, growth projections are massive. Revenue is expected to grow around 32% and earnings per share around 37% over the next 5 years. Third, Oracle is quietly becoming a major player in AI infrastructure. Companies need cloud, data, and computing power, and Oracle provides all three. And here's something most people miss. Oracle already has strong enterprise relationships, which means when companies scale their AI workloads, Oracle is in a perfect position to capture that demand. So if AI keeps growing, Oracle could ride that wave very strongly. But wait, if everything sounds so good, why isn't the stock already flying? This is where things get serious. Number one is debt, with a debt-to-equity ratio of 4.15, which is very high, and interest coverage under 5, meaning if interest rates stay high or growth slows, things can get uncomfortable quickly. Number two is negative free cash flow. The company is burning cash due to massive investments, and if those investments don't generate returns fast enough, investors could lose patience. Number three is the Altman Z-score of 2.26, which is below the safe zone. Not saying bankruptcy is coming, but it does signal some financial stress risk. Number four is competition. Oracle is going head-to-head with giants like Amazon, Microsoft, and Google in cloud and AI, and that is definitely not an easy fight. So here's the real question. Are you buying a future AI winner or a company taking on too much risk too fast? Looking at market sentiment, institutional ownership is strong at nearly 44%, and insiders hold over 40%, which shows confidence from leadership. Short interest is very low at around 1%, meaning the market is not heavily betting against Oracle. Forward PE is around 19, which is reasonable for a company with this kind of growth potential. And the PEG ratio is under 1, often considered undervalued for growth stocks. So the market is clearly leaning bullish, but still cautious. But here's something you should really think about. What happens if AI demand slows down even slightly? Here's the bottom line. Oracle is no longer just a boring legacy tech company. It is transforming into a serious AI and cloud contender. The upside is real, with strong growth, bullish analyst targets, and expanding margins, but the risks are also real, including massive debt, negative cash flow, and heavy competition. This is not a safe stock. This is a high-stakes bet on the future of AI infrastructure. So, if you believe in that future, Oracle could be a big winner, but if not, this could turn into a painful hold. Now, I want to hear from you. Are you bullish or bearish on Oracle? Comment below which stock you want me to analyze next, and subscribe for more deep dive stock breakdowns like this.